You just heard it from two of the most important chip CEOs on the planet. Jensen Huang told us AI is about to run everywhere and on everything we own. And Chris Giannopoulos, the CEO of Qualcomm, told us exactly what that means in financial terms. Whoever wins the edge wins the entire AI race. Most of the money, the headlines, and the investor attention has been pointed at data centers. The giant buildings full of Nvidia chips training models. And that story is real. AI data center spending is growing more than 25% annually and is heading toward $5 trillion by 2030. But that is only the first chapter of this story. The second chapter is the one most investors have not yet priced in. It is the wave of chips that will run AI out here in the real world, on your devices, in your car, on your factory floor, inside the camera on the wall. And those edge AI chips are forecast to grow even faster than data centers, north of 30% per year, with custom-built edge chips growing faster still. For AI to reach the level that actually changes your daily life, it has to leave the building and come to you. That is what edge AI means. Instead of sending data up to a distant server and waiting for a response, the intelligence runs directly on the device itself. The chip inside your phone. The processor in your car. The sensor on a robot. It is faster. It is more private. And it does not need the cloud to function. That shift is just now getting started. And the companies building the brains, the eyes, and the muscle of edge AI are at a genuinely early stage of what looks like a long growth runway. Market pullbacks in recent months have also brought a number of these names to more interesting entry points than they were sitting at a year ago, which adds a layer of context worth keeping in mind as you research each one. This is not financial advice. What follows is a breakdown of 7 companies worth understanding deeply if you are trying to think clearly about where edge AI is heading. Always do your own research and consult a licensed financial advisor before making investment decisions. The first company on this list is Calix. To understand why it belongs in an edge AI conversation, you need to understand where the actual edge of the internet is for most households. It is the gateway box that your home Wi-Fi runs through. Calix builds the software platform that runs on those gateways for internet providers across the country, and they have recently added an AI layer that runs intelligence at the edge rather than at a distant data center. The business transformation underneath is the detail that makes this particularly interesting. For its entire first decade as a public company, Calix never turned a profit. It lost money every single year. Then the company made a fundamental shift. It stopped being a hardware box seller and rebuilt itself as a recurring revenue software platform. Since that transition, revenue has more than doubled while gross margins climbed from the mid-40s to a record near 57%, which is software company territory for a business that most people still think of as a hardware company. The most recent quarter set another revenue record. Every new internet provider that signs on pays Calix for every subscriber, every month. A company that lost money for a decade is now quietly compounding on the front line of edge networking. The second company is Nvidia. Yes, everyone knows Nvidia as the company powering AI data centers. But the reason it belongs specifically in an edge AI conversation is what they are building to push intelligence into machines that actually move. Their Jetson Thor platform is an on-robot brain small enough to ride inside a humanoid robot while carrying approximately 7 times the compute of the chip it replaced. On top of that hardware sits their Isaac software stack and a family of robot foundation models called Groot, designed to teach machines how to see and how to move in physical environments. The names already building on this platform include Amazon Robotics, Boston Dynamics, Figure, and Caterpillar. The financial context behind this is one of the most remarkable runs in modern business history. 6 years ago, Nvidia earned under $3 billion annually. In their most recent fiscal year, they earned $120 billion while maintaining a gross margin above 70%. Nvidia's profit has multiplied more than 40 times in 6 years. The robotics initiative is the next engine being built while that existing machine keeps compounding. The third company is Ambarella, and it is one of the purest bets available on edge AI vision. Their chips allow cameras, drones, and robots to see the world and make decisions directly on the device with no round trip to the cloud required. While most companies treat edge AI as one slice of a larger business, Ambarella is the rare case where roughly 80% of their revenue is genuinely edge AI. They have shipped more than 46 million vision chips into the field, an installed base that competitors cannot replicate quickly. They recently signed a decade-long agreement with Hanwha to build Hanwha security and robotics products around Ambarella silicon. Their newest CV7 chip delivers 8K vision capability with more than double the AI performance of the prior generation. The honest read on the numbers is that Ambarella is still investing heavily for growth, so it is not yet generating large profits. But revenue grew approximately 37% over the past year, while operating losses are narrowing consistently. This is a company you analyze based on where Edge Vision is heading over the next 5 years, understanding that the earnings story is still building toward where the revenue story already is. The fourth company is Renesas. They are the world's largest maker of the microcontrollers that quietly run virtually everything inside a modern car, from the engine management system to the dashboard interface, and they are now embedding real on-device AI into that same silicon. Renesas just produced the first automotive chip manufactured on a 3-nanometer process, the ARC X5H. It delivers up to 400 trillion AI operations per second while pulling roughly 35% less power than the chip it replaced. That is a meaningful amount of compute running directly inside a vehicle. Bosch and ZF, two of the largest names in the global auto parts industry, are already designing their next-generation systems on top of it. The underlying business runs operating margins in the high teens and is genuinely profitable. Renesas acquired the design software maker Altium and the edge AI startup Picturus to own the complete workflow from the software a customer designs on through to the chip that ultimately runs the application. The most recent headline showed a loss, but that was a one-time write-down on a silicon carbide investment rather than a reflection of the core operating business. One practical note for US-based investors: Renesas only trades over the counter in the United States, which makes it slightly more complex to access than exchange-listed names. The fifth company is Broadcom, which most people know as the custom AI chip giant behind the largest cloud data centers. Their custom chips, known as ASICs, are designed specifically for a customer's exact workload, and Broadcom builds them for the biggest cloud operators on Earth. They design roughly 60% of the world's custom AI chips, with Marvell being the only other significant player in that space. What makes Broadcom relevant to edge AI specifically is their newest product, a dedicated AI engine embedded inside a Wi-Fi router and home gateway, the first Wi-Fi 8 chip with its own neural processing unit. Inference now happens inside the box in your house rather than requiring a round trip to the cloud. They also have a 5G platform built alongside Samsung. The edge line is small relative to their data center business today, but it positions Broadcom at the front of the network edge while their highly profitable core business continues compounding. Operating margins have climbed from 17% to 40% over 5 years, meaning the company keeps nearly twice as much of every dollar of revenue as it did 5 years ago. The sixth company is Mobileye, and it is the most direct way to own automotive edge vision. While competitors bolt AI onto vehicle dashboards as an added feature, Mobileye builds the EyeQ chip that functions as the eyes and reflexes of the car itself, processing every camera frame directly inside the vehicle with no cloud dependency. EyeQ is already embedded in more than 230 million vehicles on the road. That quietly makes Mobileye one of the most widely deployed pieces of AI hardware on the planet. The recent financial picture has been obscured by a large one-time write-down that is now clearing. Revenue is climbing again, up roughly 27% in the most recent quarter as EyeQ volumes recover. Mobileye has also moved beyond being purely a chip supplier and is standing up its own robotaxi fleet, owning and operating vehicles directly. One structural risk worth understanding: Intel still controls a significant block of Mobileye shares and can choose to sell into the market. That overhang is real. But an installed base of 230 million vehicles is a competitive moat that most rivals cannot close quickly. The seventh company is Cohu, and it is the one most investors never think about until a chip fails. Every edge AI chip in the world, every processor, every sensor destined for a car or a factory or a device, cannot ship until it has been tested and validated. Cohu sits at that gate. This is a cyclical business, and the current moment appears to be the beginning of an upswing. Orders jumped roughly 57% year over year, the kind of movement that typically appears when a broad wave of edge and automotive silicon begins moving across testing equipment at scale. What makes Cohu structurally interesting beyond the cycle is their recurring revenue base. Once Cohu's handlers are installed on a production line, the spares and services contracts continue generating revenue for years. That recurring piece now represents nearly 60% of their overall business. Their Eclipse platform is also winning test slots for high-performance AI processors at major names, which extends Cohu's exposure beyond automotive into broader edge compute. 7 companies. 7 different angles on the same fundamental shift. AI leaving the data center and moving onto every device, every vehicle, every robot, every camera in the physical world. The companies building that infrastructure at the edge are at a relatively early stage of a transition that the 2 chip CEOs at the beginning of this video believe will define the next decade of the technology industry. This is not financial advice. These are research frameworks for thinking about an emerging sector. The The market pullbacks we have seen recently create more interesting starting points for research than existed a year ago, but timing, position sizing, risk tolerance, and individual financial circumstances all matter enormously. Do your own research. Consult a licensed professional. And think in terms of where these technologies are heading over 5 to 10 years rather than what the chart looks like next month.